my hand from him send me tonight. I run away. I run away.
All right, guys, what is going on? What is good? What is good? It is a great day, man. It's a great day, great week, great month, great first half of 2023. Closing out the week, month, and first half of the year with an absolute banger on JPMorgan. You guys already know. You already know the vibes. You already know the vibes. 145. 145. We are there, baby. We are there. How about that? Meet me outside. Meet me at 145. How about that? Totally for the free. Now, if you read the tweet, it says 154. I was typing too fast. Clearly, I meant to say 145. That was an accident on my part. So, unfortunately, I will not be able to put this into... I won't be able to make this an ad because I fucked that up. But anyone in their right mind knows that we've been saying 145 this entire time. So, 154 is... I mean, that's way up here. So, but it's fine. Okay, we've been waiting for this. It's been in the market reviews. For those of you that are tier 2 members, it's been there. You know, we've been waiting for that. And we are finally here. So very nice, very nice. So if you've been watching this whole time, you know, you watched this happen the last few months. Originally, I brought this back up in April. Right in here. That week of the earnings, that week of right in the middle of April, it was prior to the earnings. I was talking about this in here and I was saying this was accumulation. Okay. Unfortunately, that's not on YouTube because that was in videos prior to YouTube. And that's okay, but you can take it or leave it. Gapped. I tweeted one more time on April 26th. I personally got in on May 4th. Okay, on my stocks account, I got in on May 4th on this day here. I might have spent a little bit of time in drawdown and a little bit of time sideways. Excuse me. But yesterday, really nice day. I think it was 3.5% on JPMorgan, 4.5% on Wells Fargo, and JPMorgan again up again today at 1.4%. Need caption? We'll turn the captions on, man. The captions I put in y'all's video, I do that myself. Just so you know. I mean, there's an app that does it. It's called CapCut. But it does automatic captions, but it doesn't catch everything correctly. So I have to manually change some words. Like when I say S&P, I'm saying S and P, right? Standard and Poor's. But it reads it as SMP. So I have to change that every time. And other times it'll just think I'm saying a word that I'm not saying, so I have to correct it. So that's not, I mean, it is automatic, but that's not real time. That is something that I do manually just for you guys. Just to go above and beyond. Know what I'm saying? A little razzle dazzle, if you will. All right. But yeah, man. So, you know, how do you get rid of FOMO? How do you get rid of not trading every day? I know some people get to that point where it's like, oh, I need to take a trade. I want to wake up and trade every single day. Nah, bro. You think I'm doing anything today on the indices when we've got fucking stocks booming right now? Don't need it. Don't need it. I mean, we can take a look at it. I am logged in on a TradingView paper account. I was going to see if we could do something here, but it doesn't look like it. It doesn't look like we're going to be able to do anything here for this afternoon. 44.94, probably 95 easily. And that is just a recent high. Let me just make sure all that is off. There's going to be a bunch of shit on here. It's going to clutter up the chart. But 4,495 is just the high from Friday the 16th. And it looks like it wants to take that. So I could see that for this afternoon. But, you know, I mean, it's already pretty much there. So what are we going to do now? Nothing to do. There's nothing to do. We're not going to chase it. We don't chase price. We don't chase liquor. Know what I'm saying? Know what I'm saying? But what's good, Naruto? What's good, 2020? Willow. Renting. Gee, I forgot what you told me what your real name is, but I totally forgot it. But what's good? What's good? You guys having fun? You guys like watching these big moves on stocks or what? Ed, that's right. What's good, Ed? Drop a like on the video if you guys are excited about watching these big moves, man. You guys are excited about, you know, watching big moves, potentially capturing big moves. You know, I mean, I can't promise profitability, you guys know that, but today is an absolute great day to get paid. That's why I said pay yourself before you play yourself. Okay, today's a great day for that. Getting rid of stock on the way up, not on the way down. Buying on the way down, selling on the way up, man. Buy low, sell high. It's the name of the game. It's the name of the game. Was expecting a pullback to 43.50. I'm not gonna lie to you. I woke up and I thought it was Saturday. I don't know why my whole week's been fucked up like that. I woke up and I went, wait a minute. Wait a minute, it's not Saturday. I was like, it's Friday, isn't it? So I woke up and I'm like, all right, well, what's going on? So yeah, pre-market up, 8 o'clock, up. And we just been grinding higher, man. And you already know what we're coming off of. What we've been talking about recently. The 43.82 and 43.70 level, right? Imbalance down in here. Now, I didn't think we would just hit that and run straight up here. I did not think that at all. But if you think about it, and I'm going to make a video on JPMorgan as well as Wells Fargo for the members. Detail, outlined how I was able to call Wells Fargo in advance, why we were talking about JPMorgan in advance and all that. I'll make that for members only probably this weekend. So it'll most likely be available next week unless I put it out this weekend. But the Dow having the triple highs, okay, that was part of the justification for JPMorgan. So when the Dow hit those triple highs, JPMorgan did not hit our target yet. So I was still kind of generally bullish on the indices. But if you notice this week, this was something I noticed. Hopefully you noticed it too. The Nasdaq, actually. A lot of the lows, like either equal lows or low resistant lows, a lot of those got left open this week. Did you notice that? Appreciate that, Naruto. But did you guys notice that? The equal lows left open. These two lows here from Wednesday and Thursday, those were left open. Were y'all able to see that? Because I think it was yesterday, even I mentioned on Twitter these lows that I was targeting that for a downside objective. But I was wrong. Break even. Better than a loss, but I was wrong. And I guess I kind of deserved that. I mean, we're coming off a daily imbalance, so that probably wasn't the smartest thing to do. Looking for shorts after a reaction on the daily imbalance, that was probably not the best thing to do. But hey, man, I make mistakes. I'm not perfect. So, but yeah, lows left open, Nasdaq lows left open. I would definitely be aware of that. Why would you study something like that? Well, because equal lows or equal highs, or low resistant lows, low resistant highs, those don't always have to be swept. They can be left open. So anyway, 44.95, maybe even 4,500 even. I'm sure we could probably get into that today. But yeah, so as far as announcements goes, and I totally forgot to record, but I don't think I'm gonna have any specific lessons for you guys today. So for announcements, JPMorgan hit 145. So we've been waiting actually a couple months for that. Wells Fargo still on the way. It's still moving along. I mean, is it doing all that crazy? I mean, not really. It's doing all right. But it's still back in the 72s. Almost, actually, it was 70 or 43 today. Sorry. Clearly, I'm dyslexic. Okay. So if I'm dyslexic and I can trade, then you can fucking trade too. All right. But it's just because I do shit really fast. You guys know I drink energy drinks. So I'm like, I'm trying to go. You know what I mean? But anyway, 43, we're back, or we hit 43. Now we're back in the 42s. So, I mean, that it's okay. And, it's not the greatest thing in the world, but it's still up. We're definitely up from where we got in. So we're moving. Okay, we're definitely moving. Tomorrow is July 1st, which means the next public video is going to be out. The Smart Money Fundamentals. So again, just like the measuring moves video. Yeah, I don't know why that is in there, but that's okay. So just like with the measuring moves video, this one is about a 17, maybe 18-minute segment of that live stream, but it's got some edits, it's got some captions and stuff like that. and I go over the smart money fundamentals, right? That the market does what? It moves from X to X, it moves from Y to Y, and things like that. So we go over a few different things in there as well. So that comes out tomorrow. That will be at 1 p.m. Eastern. Okay. And why is that important? Well, not just because I want you to learn some shit, but because that is also the video that you need to watch, hopefully all the way through, please. I need that. The channel needs that. But that is also the video where the comment section, I will pick 3 random winners to receive a copy of the Daily Stoic. All right. So you guys get to learn stuff. You get to watch big moves, potentially get a book, right? I mean, dude, who wouldn't love something like that? So free sauce on the sessions, free trade ideas. I mean, bro, how can you not be successful, man? How? Just a question. It's not an income claim. All right. What's good, Lewis? 500 and 100. I'm not sure what we were talking about right there. With a candle on 626 1 hour before the afternoon session, consider mitigation. 500 and 100. I think you're talking about the S&P and Nasdaq. We'll have to go back and look at that in just a minute. Remind me if I don't get to it. Because you know me, I'm fucking all over the place. But I try to accommodate for everybody. Okay? I try to accommodate for everybody. So we'll probably watch this thing trade higher too. I need to wake up, man. How do you prevent yourself from being overwhelmed with all the information you see from all charts and time frames? I feel like sometimes that affects my decision-making efficiency. And so that, I believe, 2020 is called information overload. Ryan Holiday talks about that in Stillness is the Key. Information overload. So he said, I think there's a chapter called Disconnect. So we live in the age of information. We all have phones, right? We all have internet access. You're watching the internet right now. That's how you're able to watch me or whatever YouTuber you want. And there are a lot of assets, a lot of time frames. It's a lot of information to filter out when you scroll through Twitter, when you scroll through Instagram or Facebook, whatever, TikTok, right? It's information. So what you have to do is one of two things. Either one, what I do is filter out. Don't follow accounts that don't provide value. Don't follow people that are, nothing but drama, whatever the case. If they're not providing value, if they're not improving your life, unfollow them. As simple as that, bro. The only people I follow is like you guys, to follow you back, because I know some of you guys appreciate that. And a few accounts that, like David Goggins or Bedros Keuilian, because they provide value. You know what I mean? So that's kind of the social media aspect of it. With trading, it's the same thing. I'm going to filter out. I watch SPY. I don't usually trade SPY. I watch Dow. Hardly ever fucking trade that bullshit. I watch Nasdaq. I trade Nasdaq sometimes, but I use them as a reference point. I'm using those charts for relative strength analysis. There's a purpose for that. So with currencies, I have a bunch of currencies I watch too. My watch list is probably larger than most traders. I mean, you've seen my stock list before, like all this shit. I haven't traded Microsoft in years. I haven't traded Nike in a long time. Okay, I don't trade everything that you see here, but they are reference points. Oh my God, Carnival Cruise Line is up 9%. The fuck is going on over there? Anyway, so with trading, it's the same thing. I'm looking for something specific. It's why I gave you my personal mitigation model. I gave you that mitigation model earlier this year, but on YouTube, I gave it to you like a month ago or something like that. I don't remember. Because I gave you specific criteria. So you're not looking for institutional candles. You're not looking for, I don't know if we talked about divergence or not, but there's like certain things that you're not looking for. We didn't really talk about zeros, 20s, 80s, and 50s either, right? So it's very strict criteria. So you're not trying to do a bunch of crazy shit. When you look at the chart, if the criteria is met for the mitigation model, it's either met or it's not met. Okay? If it's not met, you don't trade. If it is met, then you may consider taking a trade. You see what I'm saying? So it's just a filtering system. You don't want to be overwhelmed with information. If you can't make an informed decision with all that. You know what I mean? And this is why it's not usually a good example or a good idea either to talk to a bunch of people about a problem that you have, right? Like say you're having relationship troubles. Okay, I've been there, fucking done that bullshit before. You know, if you have a problem in your relationship and you talk to your friend or you talk to your parents or you talk to whoever, and you're going to get a bunch of different advice, right? And what good is that going to do you? Now you've got a bunch of different options. Now you're almost even in a worse position than you were before. You don't know what to do because you got so much information to work with. It's information overload. You got to not do that. Okay? So hopefully that answers the question. I know we kind of went in on that, but you know, it's a good topic. It is. Thanks, Willow. I try to do G shit. Know what I'm saying? I mean, damn near handing out free money, handing out fucking books. I mean, dude, I told you guys I'd hand out an iPhone at 900 more members. The day I get to 1,000, I will give out an iPhone case, screen protector, and whatever phone is out at that time. Whatever iPhone. It could be iPhone, I don't even know what they got nowadays, like 17 or some shit. Whatever it is. Don't care how much it costs. I will send one out. Okay? I like giving shit away. I enjoy it. But yeah, Kevin, I agree. Kevin said we should study 1 minute price action, even though we don't trade the 1 minute time frame. Well, I do, but some people don't like 1 minute. I get it. But that's because price is fractal, and what we see in the 1 minute helps our general knowledge of how the markets move. I agree 100%. But yeah. Okay, so Lewis, sorry. I fucking forgot it again. Ed, there we go. We gotta find a way to change our name, man. But Ed, we'll go back and look at it. Do I use Forex Factory for DXY, or is there another site? I use Forex Factory. I don't use anything else for like the news. That's the only news I watch. That's the only fucking news I want to pay attention to. Don't care about Fox. Don't care about CNN, CNBC, all that bullshit. It's all bullshit. Okay, Forex Factory is the only news I pay attention to. And really only the Times, not so much the news. But yeah, Trillionaire, your sniper is green because you've been here for 3 months. The bronze is the first one you get. After 30 days, it becomes silver. After another 30 days, it becomes green or something like that. Yeah. But you're going to be green for a while because after 3 months of green, it becomes blue. And then after 6 months of blue, it becomes gold. Just like the one Trillionaire mentioned in the comment. That gold one, that's what you get after 1 year. That's why I have mine down here. Right below, you see right below this price action down here? This, the gold one, that's what you get after 1 year. That is the smart money Stoic. Okay. Changing it as we speak. Changing what here? Oh, it was a question, more to the point. So what we see on the 1 minute time frame is what we should see on other time frames. Well, yeah, price is fractal. I posted that meme yesterday of The Office. I forget what that girl's name is. Pam. There we go. Is the the meme of Pam where she was saying corporate wants you to spot the difference between these two pictures, but they're the same picture. But I made one like a daily time frame and the other one's a 5 minute time frame, but they're both the same picture. I was trying to tell you guys to basically say, look, this is the fractalization. What happens on one time frame happens on all time frames. I've done that before. It was a couple years ago, but what I used to do is I used to take like 2 or 3 different charts. I'd take a screenshot, but I would take the asset off so you couldn't tell what it was. You couldn't tell the time frame and you couldn't tell the asset. They were 2 or 3 all the same shit, right? And I'd be like, well, this was gold on a 5 minute, this was the S&P on a daily, and this was the euro on a 2 minute time frame, but they all looked almost identical. And I was teaching you guys and proving to you that it doesn't matter what you trade, it almost doesn't matter what time frame, it's all the same thing. And I was the only one at my previous endeavor that I believe I was the only one who pretty much taught everything. Everything. You know, there was like different subjects, right? And I was only a specific educator, but I taught everything. I'm like, I'm not here to teach you Forex or stocks or, you know, commodities or whatever. I'm teaching you price action. And when you learn that, you can do whatever you want. You learn the mitigation model, you can go trade options. You learn the mitigation model, you can go trade index futures. You learn the mitigation model, you can go long-term stocks. Doesn't matter. You can go trade gold. Doesn't matter. So hopefully you can appreciate that. But yeah, watch this rally above 44.95 probably. But yeah, Aberneth, it'll be good when you guys are gold. Right now, there's only 3 people who have the longest running memberships right now. Because I think the day I launched, I got like 3 people to sign up. And so since they were first, I think there was like 5 people the next day. So there's about 8 of you that are really close, but there's 3 people that beat the other 5 by like a third of the day. So I was just looking at that too. So the first, we're going to get like, I think March 26th of 2024, we'll have our first 3 gold. I mean, but that's if they stay though. So if they cancel their sub, then they're not going to get it. Let me just take a look real quick. I'll show you. I mean, I'll tell you, I'm not going to show you. Because there's probably some things in the back office that is probably not for the public to see. So I think it's Nikki, Drosky, and Alex. Just Alex, no last name. That joined 3 months ago. Nikki, Drosky, and Alex. Those are the first 3. And then I think it was Ali, Nick, Andreas, Mia, and Vadu. Maybe Naruto and Nicholas that were like the next day. So, but yeah, you guys will be gold in March of 2024. And I know that seems like a long time, but dude, I've been educating for years. I'm like, that's only another 8 months, 9 months, something like that. It's not a long time. It's a long time for a day trader, though, I tell you that. But yeah, that'll be really cool when you guys get gold. We'll do a special giveaway for that too. Our 1 year anniversary. the Smart Money Stoics channel 1 year anniversary. Well, this channel's 8 years old, but you guys get what I'm saying. Like the Smart Money Stoics community 1 year celebration. But yeah, I celebrated last night. I went to a restaurant near my house. Nice restaurant. I mean, it's not the nicest restaurant, but it's probably about anywhere from $50 to like $75 a person. So, decent. About $15 drinks, like $20-$30 plates. You know, I mean, it's not the most expensive thing in the world, but you know, it's pretty nice. There's $44.94. And I went to celebrate for 100 members here on the channel. We're actually at 107. So we pretty much skipped the late 90s and went straight to the almost 110. So that's pretty cool. So anyway, did you notice how I said we would probably run up here and then we just ran up there? I mean, you guys come on here and you see this shit all the time. It's not difficult. The difficult part is managing your emotions, managing the expectations, not, you know, bringing your personal flaws into this. You know? Actually, I think it was Casper had posted a Twitter, and I think he was talking about this in here. So that was actually it's actually pretty good. It's really pretty fire right there. I think it was a 1 minute though. He had posted something like this. So that was during lunch, so I probably wouldn't have done that. But from 78 to 88 is 10. And then to 94, man, that's over 15 points. That's pretty good, man. Because remember, if you ever trade E-mini, this is $50 a point. So that means a 5-point move. So from 78 to 83. Okay, that doesn't seem like a lot. But that's $250 in 13 minutes. You know what I mean? That's $250 in 13 minutes. Not bad. Now, obviously, that whole move here is 16 points. That's $800. That's $800 in an hour and a half. So, again, unless you're Saul Goodman, you're not making $800 an hour at your job. You're not. Unless you are, great, good for you. But I don't think anyone in here makes $800 an hour. But in the futures market, it is available to you. Now, of course, you have to know the inverse of that too. You could also lose $800 in that hour if you obviously don't use a stop. If you get it wrong and it goes the other way, then you could easily lose just as much too if you're not careful. So there's a caveat to that. Don't, always respect the risk. Don't ever think just because I show you, good moves and I can tell you where the market's going to go before it goes there. Not every time, but a lot of the time, that doesn't mean that you're going to just come in here and make money right off the bat. Okay. So just be realistic. All right. But I am showing you what is available to you. What is available. But yeah, where we go from here, I don't know, man. It's Friday. I am not trading at all today. What I would do is study the intraday today here. We had Dow sweep lows, right? But when the Dow swept those lows, the S&P was higher. So that's showing accumulation. Now, when the Dow entered lunch here, right there, well, lunchtime came around essentially. The S&P was slightly lower before lunch, taking out a short-term low. Then it rallies, imbalance, drops down into that imbalance at the beginning of lunch, and then takes off. So study that. Okay? Beautiful manipulation here. Accumulation, manipulation, fucking repricing. Well, this to me was like repricing right there. Manipulation, accumulation, change in market structure, shift in market structure, shift in fucking price delivery, whatever the fuck you want to call it. I don't care. Literally, I do not care. I don't care what you call it. As long as you know what's taking place, great. Imbalance, boom, fills that in, down to the tick, takes off. Okay? I'm telling you guys, study these things. Me personally, I'm always going to tell you guys what I believe. Okay? And this is why I'm wrong sometimes, because I bring my own stuff into this too. Like, I'm not the only one. And I'm telling you, like, right at the beginning of lunch, that's probably not something that I would have done for me. I probably would have left that alone. That's okay. So I would likely pass on something like this. Majority of the time, I have shown you guys trades before that I've taken during lunch, but I would rather just not. Okay. So anyway, there was something I was going to show you guys. I forgot what I was looking at earlier. Oh, that's right. British pound. And we'll come back to the indices here in a minute. British pound. Because someone asked about this yesterday. I lied. Wednesday. Because we don't stream here on Thursday. They asked about British pound. And we talked about this on a daily. We talked about Friday, May 5th. We talked about this up candle here. We talked about how it was trading into a mitigation, right? Potential mitigation. Okay. Well, no real imbalance there on the daily. Weekly is kind of large. I mean, I wouldn't have done anything with that per se. But watch this. When you go down in here, okay, because what you got to remember is this orange box. You have to remember, because if you don't have that on your chart, it's not going to make sense. It's going to be like, what the fuck is that? Okay. But look what happens today. Look at this. What happened between Wednesday? I think we talked about it in here because our stream was about right here. Okay. So what takes place Thursday? New York session. What's it do? Drops down, sweeps Wednesday's low, consolidates. But you guys already know what happens in consolidation. Y'all know that meme? This is what I want you to think about every time, okay? Y'all know that meme, not meme, it's a gif of Birdman. And he's doing this. Right? With his hands. The Play-Doh roll. That's what you should think when you see consolidation. Okay? This bullshit right here. Well, I mean, it's not bullshit, but a lot of traders get frustrated in consolidation because they're like, I wanted to trade somewhere. Okay? So look what happens. Big razzle dazzle. Trades up above these highs. Drops down. Okay? Now this is pre-London right here. Sweeps the lows. So now it's taken buy side, came down, took sell side, then rallied, break of structure to the upside, drops down into what? This down candle here. These are consecutive, so I probably wouldn't have done anything with that. But it trades lower, okay, during London. And then what? Takes off. So some people, I think, still get confused about how do we know that this imbalance? Oh, John, well, that's a mitigation, no, because we have a high, low, higher high that swept liquidity, price drops down. Here's an imbalance, and that's a mitigation. oh, well, I took that and then it went my way, but then I took a loss. Well, what the fuck, man? Oh, you know, mitigation, that's bullshit. Imbalance, oh, those are bullshit. This doesn't work. No, it's because what is this orange box right here? A daily mitigation. So what do you think is higher time frame? A 15-minute, a 5-minute, or a daily? Come on. The daily, of course. So then what takes place? We took off. So yeah, it's going to say, fuck this imbalance. Fuck this high. I'm not going to take that high and then roll over. Fuck that imbalance. I'm going to trade through that, back into it, and then higher. Okay? You should really study what I just gave you. Okay? You thought I gave you some sauce the last few weeks, man. I mean, that's just eyeballing. I don't really know if it traded into that and back into it or not. Right there. Into it, above it, back into it, higher. See? Price just does the same shit over and over again. Manipulation, or excuse me, consolidation, manipulation on both sides, and then it runs. Okay? But wait a minute. We're not done. We're not done. We're not done. But okay, John, I see what you're saying. I see how you could come to that conclusion. Right. But how do I know it's British pound? How do I know? But what about the euro? You know, because the euro's correlated, because I saw some fucking goober on Instagram reels and YouTube shorts that say the euro and British pound are correlated. I mean, you're not wrong. They are highly correlated, but what's the euro doing? What's the euro doing? Let's come back. Look at British pound. Look at the lows. You have a low on Thursday. This consolidation and then the manipulation here, right? What is that? That is a what? Higher low. Low. Higher low. Break of structure, retracement, take off. Okay. Let's take a look at euro. What's going on over there? All right. Thursday has a lower low. Makes sense. Oh, wait a minute. Wait a minute. That's not a higher low on the euro. That's not a higher low on the euro. That's a lower low on the euro. Oh, so British pound is not trading below Thursday's low, which is showing what? Accumulation. Oh. Well, that's kind of cool. I wonder if anyone ever put out a book that would show something like that. I wonder if anybody would have lessons on YouTube that talk about this. I don't know, man. I don't know. Daily mitigation, divergence, consolidation, manipulation, break of market structure, retracement, takeoff. Can we take a look at gold? Gold looks like dog shit to me. That's what it looks like to me. And the only reason I say that is because I don't like when it does stuff like this. Sorry, not that one. I guess it was this one then. Where it'll leave highs, right? And then it'll leave highs again, takes a short-term high, but then breaks down, and then today it runs the highs. So sometimes with gold, because you guys already know I don't have the best timing. Like I'm pretty up to par when it comes to market direction. You guys have seen that over the years. I mean, that's not up for debate, right? That's already been proven. But where I'm still shaky, and I don't hide from this, but where I'm shaky sometimes is the timing of it. I might be wrong on Wednesday or Thursday and then be right on Friday. So, I mean, again, not the greatest when it comes to timing. So there's that. But it did very similar to British pound. Okay. You got to pay attention to consolidations. You got to pay attention every time. Every single time you got to pay attention to consolidation. Almost always. Well, the only difference here between gold and British pound is British pound took both sides and then ran, which I usually don't care for because I usually think the first move is the false one, which in most cases it's going to be. Like this one, for example. Consolidation, it drops down first, then runs higher. So that run lower is manipulation to go higher. The only, again, if we come back to British pound for a minute, it took both, right? It ran up first and then lower and then took higher. So like that to me may have thrown me off, but I don't trade London anyway. So, thank God for that. But the metals, it doesn't always take both sides first. This I think is a lot cleaner. So for me, you can do one of two things. Well, there's your New York right there. You can do one of two things. You can either, if your bias is bullish, because let's say you have highs up here. Okay. Well, and I don't know what's down here. There's got to be something on the higher time frame down here, or otherwise I'm not taking something like this. But it's like, okay, well, we came down. What did we do? Broke out of consolidation. This, I guess, imbalance here from yesterday. I would look for longs down here or wait for that willingness to trade higher and then find some smaller time frame opportunities. Okay. So like gold, I mean, look at this. This was back and forth a lot, and I really don't care for that. But what I'm saying is, if you took this consolidation, now I just drew a random consolidation. I didn't draw it from a specific high or a specific low, or, I just drew it in a general sense. Okay. So all I'm going to do is stretch that over. That's it. Drop down. There's your manipulation. If it trades now above consolidation, now it's shown its willingness to trade higher. Why would it want to trade higher? Again, liquidity. Don't forget about this consolidation here and it being low resistant highs as well. Let's see, honestly, that's probably even better. That it consolidated and left clean highs back here. You might forget, but the algorithm doesn't. Mr. Smith doesn't forget. Morpheus, Neo, and all them, they don't forget, okay? They're paying attention. Mr. Smith, his algorithm and shit, okay, is not going to forget. You might, and this is why machines are, smarter than humans, okay? Elon Musk would probably appreciate that, but anyway, it comes and trades above, right at 740, right? It trades above that consolidation, yes? Right there, at that point right there, boom. It's now above consolidation, right? Now what are you looking for? Bullish order flow. Okay, so we've already manipulated to the downside, broken out to the upside. All right, so now what am I looking for? Well, I'm probably going to look for an imbalance. Do I see one? No. I don't see one. I don't see an imbalance there on a 5-minute time frame. But you know what I do see? A down candle right there. There's a down candle right there. Fractal low. Right? Fractal low in institutional candles. Taught you that years ago. All right? Some of you, if you're new here on YouTube, you probably wouldn't know that, but that's okay. So there's a down candle right there, right? Boom. 750, it trades into that, off of it, retracement, and then where's it run to? Straight for those highs. So like looking at it now, I can tell you, and for those of you that watched the video last night on the market review and taking partials video, you would know that if it was me, I wouldn't have bought down there and then exited right here. Wouldn't have done that. Wouldn't have done that. my trade most likely would have been buying right there, or maybe just after it if I was late, like, because we do that sometimes. And my exit would probably be about right there. Probably. Unless I was able to squeeze out a little bit higher, or maybe there's a imbalance up here that I didn't see beforehand, which I probably would have wanted to look for anyway if I was trying to really get the high. Because look at this, 1 hour imbalance, right? How far is the market going to go above equal highs or lows? So there is that, right? Look where it magically trades into. Almost the high end of that 1 hour imbalance, right? Okay. So unless I was aiming for like halfway or the higher end, I may have held, but I usually don't. I usually try not to capture the absolute high, because sometimes it'll do it'll trade right into that and then just rip ass lower and erode all your gains, right? It's gold. It's the most manipulated asset there is. So you got to be careful with gold, man. Gold is like a toxic ex, okay? You could have a great time, or you can get your fucking ass burned. You know what I mean? So just be careful with gold is all I'm saying. Gold can really pay, can really do well, but gold can also do shit like hit a reversal on your ass quickly. Like, look at this. I mean, guys, look, don't take my word for it. Look at the price action. Rallies, back down, 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 rallies. Like, it's a lot of give and take, man. And if you're sitting there looking at your P&L, doing this over and over again, unless you have like stoic discipline, emotional discipline, it's going to bother you. Oh, I'm up $50. Oh, down $50. Oh, up $100. Oh, down $100. Oh, like over and over and over again. Dude, I'm telling you, it will mess with you. And gold definitely does that. So I would have been emotionally exhausted right here. I'd be like, son of a bitch, just give me my money and I'm out. Let me get my shit and let me pack my shit and get the fuck out of here. Okay. JPMorgan, same shit. Oh, we're almost at 146. I did sell a little bit today. I sold 1/6 of what I had. I might actually sell a little bit more, because this is nice. This is real nice. Okay. When you're able to buy, I told you I bought on May 4th. So buying in here, okay, and seeing that right there. A little over 8%. Okay. 8% in 30 or 57 days. So 2 months. 2 months. They say what? The S&P averages 10% a year. This did 8% in 2 months. So, you know, but that's how you lock in, man. I like to exit longs on the way up, not on the way down. It's the same shit. If this was, I guarantee you, I'd do the same shit. This was a 1 minute chart. If this was a 1 minute chart, I would do the same thing. I'm like, oh, if this is the afternoon session, these are our morning highs. I'm getting out of there. It's Friday. I'm done. Goodbye. Goodbye. Hello, mimosas and swimming pools and cigars. Get your money and dip, man. Not financial advice. But what I look to do is get my money and get out. But anyway, what's up, Smith, Katarina? But yeah, I mean, so with gold, I like daily time frames, but look at the daily on this. This is gross. But when I trade gold, though, I don't trade based on the daily. I do trade like smaller time frames, 5-minute, 15-minute. I usually don't go above that because then the risk is too much, especially on futures. God. Ugh. But you do want to have at least, you want to know what's going on the daily time frame, and then match like smaller time frame entries and stuff like that. Okay. So that's not a bad reversal here. And if you pay attention, look at the week. What was the week? What did the week do? We'll look at it. I taught you what? Friday can often be a reversal day. If it's down Tuesday, Wednesday, Thursday, chances are Friday's probably going to be a reversal day. Okay. And that's not the first time you heard that either. I know it's not because I've been teaching that for years. Monday, high of the week. Tuesday does what? Drops down. Wednesday does what? Drops down. Thursday does what? Drops down. I mean, it does close. I mean, it comes off of that low, but that's still, to me, like a slightly lower close. And then what happens Friday? Reversal. Markets aren't hard. I'm telling you, a lot of the shit I taught you keeps happening. It keeps happening over and over and over again. Now, if we diverge with silver, I have no idea. I mean, that would be ideal, though. Silver can't even take Thursday's high. And honestly, I'm not really sure why my highlighter is this thick. Oh, it's because I covered that tweet. That's why. Some dude like said the market was going to trade lower, and then it ran higher for like a month. And that shit is just funny. But study that. Monday made the high of the week. We traded lower Tuesday, Wednesday, Thursday, Friday reversal day up to liquidity. Why would it do that? Because anyone who's been short is trailing their stops, right? Cake. Cake. Let's see where we're at now. Kind of just dancing right now. Kind of just dancing. But there's 2 hours left in a week. 2 hours left. Well, in the day, week, and month. And quarter if you look at it. If you look at it that way. Like January, February, March, April, May, June. But yeah, I think today is probably the greatest close to a quarter I've seen in a long time. Fantastic close on JPMorgan. Great close on Wells Fargo. Great close on stocks in general. I mean, on the indices in general. I mean, dude, we're still holding triple Qs from like 6 months ago. From down here. My self-directed IRA is still long from down here. You know what I mean? It's not a lot, but when price runs your direction for 6 months, you can call yourself a trader. And then, so some of those losses you take on an intraday basis, you don't think you'd get back with something like this? What's the point of swing trading, bro? Those big wins are to essentially get your losses back, man. And then all the wins you took, you'll be in there too, man. So that's it. Nothing else to do today. We're pretty much done. And we've been here for an hour. So I told you guys, I usually don't. Like, I don't want every video to be an hour long. Most people just don't watch that. The live sessions, though, you can't change that. But I am going to be curious to see where we make our high of the day. Because I'm fairly convinced we could do 4,500. I'm fairly convinced we could do that. Or, sorry, for E-mini. I mean, E-mini or micros, either way. I think we could do 4,500. But am I in the S&P? No. But am I in stocks? Yes. So it's still advantageous for me either way it goes. I don't think we've been really watching any other stocks. I mean, I know Jordan has. He's been talking about some stuff. I think he talked about Carvana, which honestly is, I mean, it's better than any fucking stock I picked this year. I can tell you that. So, I mean, I don't know if he's watching the stream, but I think he called this out earlier this year. I mean, I don't know if it was at 6 or 8, or maybe even back in the 4s. I don't remember exactly what he had called out, but Carvana definitely been. I mean, think about that, from the 6 or 8 all the way up to 26. That's pretty good. But I'm not taking credit for that. But yeah, if you guys follow Jordan or Mr. Seven Sources, he definitely called out Carvana the last, I don't know how long it's been, but it's been a while. So huge gains over in the Carvana market. I think like Carvana, they filed for bankruptcy, I think, back in here, or something happened where I wanted to stay away from it. Like, I didn't want to fuck with Carvana because look at this shit. We went from 50s down to like 4. I'm like, oh, I don't know. I mean, I'm sure he had his reasons for this, but I wouldn't have done it. And so yeah, I missed out. But you know what? Options do this shit every week, or at least every couple of weeks. You'll see stock or those options contracts going from 50 cents, $1 to like $3, $4, $5, you know? So that'll do this same shit. Matter of fact, let's look at that. Let me see if I can pull that up. Give me a second. And then I'll show you this, and then we'll be done for the day. Week, month, quarter, all that good shit. The 145, oh no, 630. We'll just say 728. No, we'll say 84. We'll just say 84 because that's a long time. And that's in the third quarter. All right, this looks like shit. We might have to pick a different one. Why does that look that way, though? I don't know. Maybe the monthly then. 818. Let me see what that looks like. That still looks kind of rough. I can't tell why they only have the prices on this chart for only the last 2 weeks. Something doesn't seem right. Something does not seem right. Oh my God. Let's see about 721 then. All right. I think it looks pretty awful, but that's okay. You guys still with me? Drop a 1 if you're still here. Drop a 1 in the chat if you're still here real quick. Because I just want to show you this and then we'll be done. I might need a second energy drink here in a minute. All right, thanks Andreas 2020, Lewis, and Naruto. Appreciate that. All right. So this is the July 21st. So 7/21, 2023, the 145 call. Okay. The 145 call, that's the price I've been telling you, 145 and above. That's what we're looking for. Okay. Now, this is where long-term options, this is why I said timing is important. Options have what's called a theta. Theta's time decay. They have delta, which is hard to explain. I'm sure you could probably Google it. I know I don't tell you to do shit like that, but it's hard for me to explain what it is and exactly how it affects certain stock prices, okay? But what I'm saying is, if you timed it incorrectly, let's say you bought it a month ago, well, it didn't really gain value. It went from about $150 up to maybe $240. Okay, so you made 80, 90 bucks. All right, that's not even a 1-to-1. Then it just kind of sits around 150. It eventually gets to 260. Like, okay, maybe you made $100 a contract. All right. It's still not 145 though. So look at it recently. It drops down to the 60s. So now it's like, well, fuck. We paid 150. Now it's down to 75, 80 bucks. Well, shit, man. I'm down like half my money, right? But look at it today. Worth 289. At least as of right now. So with that volatility from yesterday, and then it's still, now it's above 145. So now it's in the money, right? Because the stock is 145.67. So now this option contract is in the money. And I don't know if that adds a premium or not. I think it does. I'm not sure. But look at the last 3 days. From 80 to 280 per contract. So, you know, I believe that anybody would be willing to put $100, $80, maybe even $200. Maybe you flopped the entry, you got excited, you said, fuck the entry, I just want to ride the move. Okay, your $200 went down to like 75 bucks. But if you didn't just sell it at a loss, well, now it's worth 280. So you wouldn't have made money quickly. You wouldn't have made as much money, but you were still able to be profitable. That's still a profitable position there. But this is why timing is important, guys, because if you fuck it up, you're going to lose value. But it's when volatility premiums. That's why I posted that dumbass song by Eminem yesterday. When those stocks really move, this is why I wouldn't say I get excited per se, but dude, when you watch your position go from $75 to $190 per contract, that's something to be excited about. You know, making money is a fun thing. Like, don't get me wrong, making money is fun. I don't care. You can make your first $100 trade. That's going to be fun for you. Shit, your first $1,000 trade, that's going to be fun for you. You know? That's all I'm saying. But no, this is a great question, 2020. Your investment, whatever you, this is the thing about options, okay? They are risky per se. Like most options do expire worthless. That's, you can look that up. That's true. But whatever you buy a contract at, your value will not go to negative. The worst it will go to is zero. It'll be worthless. You pay 150 bucks. Let's say for this contract, you bought it at 150 bucks. Let's say the market didn't go to where I said it would go. It went lower. You would lose whatever you bought it for. So the most you could lose is 150 bucks. It's not going to be like, oh, well, now you owe me fucking $1,000 or some shit. Now, selling options and stuff like that, that's going to be, I don't get into that realm. I don't get into that other shit, okay? When the world of options is very complex, there's a lot of moving parts, and there's a lot of things, frankly, that I just don't understand. I only take like either short-term or long-term call options. That's it. I don't do these butterflies or these fucking hammers or whatever, iron corridors and shit. I don't know what any of that stuff even is. Okay? I don't understand it. It doesn't make sense to me. I just would rather buy it 100 or 70 and then sell it for almost 300. I'm cool with that. I'm cool with buying low and selling high, and that's gravy to me. Okay? So you get some juice out of the options. If you purchase shares, then you make a little bit from that too. So it's blessed, because the option contract will expire at a certain point, like this date, or if you sell it today for whatever you get it for, then you're out of the position. But if you have stock, you can at least hold on to that as long as it keeps going higher. So think about this. Remember, I talked to you guys about, this is the last thing and then we'll hop off. I know I do that a lot. I do that shit a lot too. Imagine for a second that you bought when I did, down in here. Okay? Or maybe you scaled in and maybe your average is like 136, maybe even 137. Okay. Well, you can sell some here, in theory, right? Not financial advice. But you could sell some here and then have your stop loss at break even or maybe into profit. Okay. So now you bank some profit, go to break even, and then guess what? If this stock happens to run, let me take this off. If this now happens to run to all-time highs, well, you're in from the 130s or the 140s. If it gets to the 160s, 170s, after that, it's just free money, bro. And you're already in the position. You're already up. You're probably not going to watch it every day. I told you guys I wouldn't update it every day. But now you've got a position running, and it can run for months or even years. Even a year. Look at some of these moves back in here, 2020 or late 2022. You don't think riding big moves is fun? Yeah, it might be boring, but it's money. It's growth. I mean, fuck. And risk-free is even better. Buy low, sell high, and then hold the rest, bro. It's damn near foolproof, bro. Once you're out of the woods, okay? Once the market, finally goes that way we want it to, you're out of the woods, man. Everything else after that is just extra. It's just like in Forex, if you take a trade, it hits your TP, but you hold a little bit just to see, and if it runs for weeks, it's blessings, man. Because I don't know if it will or not. It could. You wouldn't even believe, if you watch stocks all the time, you will not believe the amount of times where you thought about buying and it runs for months, years even. Bro, I started trading in 2014. Okay? That means I was trading, I don't think probably wasn't trading JPMorgan back then, almost 10 years ago, but you look at some of these moves in here, right? Where, well, this is a weekly time frame. I don't know if there's any daily accumulation in here, but let's just say there is in the 50s or the 60s. Well, guess what? Once it left the 60s, it never went back. It never went back. And look at it. You know what I'm saying? So it's damn near unlimited after that. And that is almost what I'm trying to do here with JPMorgan. It does look a little jumbled in here, but I'm in from the low 130s. Okay? My average is 133. It's like 133.25 or something. That's right there. Okay? So that means I sold some here to lock this in. Obviously, I'm going to put a stop somewhere, probably maybe 136. Okay. So no matter what, as long as there's no earnings that completely fuck that up, then we should be fine. What's good, Crocs? But yeah, but to go back to your point, 2020, an option will expire worthless, but it won't go negative. At least the like the basic call options I tell you about, or that I look for, they won't. But options do lose value if the market just consolidates. So either have good timing or plan on scaling in, which I usually don't recommend. People who talk about like DCA, dollar cost averaging, if you have the dollar cost average, it means your timing sucks, and it means you probably don't know how to trade. But I'm not gonna start no shit, okay? But whatever. It's cool. So that's gonna be it for today. It was a great week. It was a great month. It was a great quarter. We hit stock market milestones. We hit stock milestones. You guys have now learned about options. We have over 100 members here on this YouTube channel. The views are going up. The subscribers are going up. I mean, the accounts are going up. Like, dude, what has gone down? Nothing has gone down, bro. The knowledge is up. Everything is up, bro. This community, the Smart Money Stoic community right here on YouTube, man, I'm telling you, this is going to be the next fucking big thing. It's going to be the next big thing, bro. When if you guys ever decide to get funded, we can celebrate that too. I've had multiple students get funded previously. I've had students in articles. I've had students to gone on to do their own mentorships without my blessing, but people are going to do what they're going to do, but at the end of the day, man, we're all here to grow and learn and elevate together. And that's exactly what we're doing. And that's what I told you we would do. It's what I told you we would do, man. So celebrate this weekend. It could be something small. It could be something big. It could be something as simple as just like a cupcake or reading a book. I mean, whatever, but celebrate something. Literally, the back office is booming. The trade accounts are booming. The views, they're booming. I mean, everything, dude. And that should be exciting. The only thing that you could argue is that if you didn't learn anything, if you have not learned anything in the last month or 2 months, let me know. Let me know. But I can guarantee you that's fucking cap. I can almost literally guarantee you that that's bullshit. If you've been watching these moves happen, from down in here, Wells Fargo from that low, it wasn't here on YouTube, but down in here, deep retracement, I didn't really care for that, but we're back above the 42s. Okay, JPMorgan, same thing, consolidation, ran higher, we spent a lot of time here, but now we're up. Like, bro, you let me know if you have complaints. You let me know what you don't like, and I will do my best to accommodate. But almost everything we do here, Did we get to 195? We got to 44.95 as well. We do the intraday shit. We do the long-term shit. We do it all, bro. Options, commodities, stocks, futures, day trading, swing trading, everything, bro. I mean, come on. How could you not enjoy this shit? And now you know why I love trading so much. Now you know why I don't mind spending my time teaching you guys this shit or staying inside all day. I don't care. I love this shit. I love it. I would do this every day for you. You know what I mean? And now you know why. Because it's days like today that make it all worth it. It's days like today. I will go back to JPMorgan one more time. It's days like today where when you can capture a nice move, a nice payday, that can just, it makes all the bad days worth it. It really does. You lost some money here and there, but you catch a nice move, it brings it all back. It just wipes it away. Wipes it away. You know, and the come up is real, man. When you're a struggling trader and then you finally get that come up, you finally get a nice win or some growth on the account, it feels great. I know it does. And it's days like today is when that shit happens. All right? So with that being said, now we're done. So have a blessed weekend. I hope you had a great day, a great week, a great month, a great quarter, and a great first half of 2023. We are only getting started. Literally, we are only getting started. So be blessed. Make sure to watch that video tomorrow. Make sure to comment. And then on Monday, we'll do our giveaway. On Monday, we'll do our giveaway. I will see you then.